Okay, welcome everybody. Welcome to Lincoln's first ever hosted webinar. So this is a live hosted webinar. I'm Brendan Taylor. My fellow panelists, you've got Tom Warner, our tax technical specialist, who's waving at you, and Jenni Leonard, our HR specialist, who's also waving and with a very happy smiley face. This webinar is all about COVID. Not the virus, but about the impact on businesses, employers, employees. Specifically about the government stimulus package and other measures to assist through the massive economic impact of COVID. This is all very new to all of us, and we don't really know how it's going to pan out, but we're just going with it. And so, just for a start, just a bit of housekeeping before we get started. This is a live Q&A webinar, so you'll see a Q&A button on the toolbar at the bottom of your screen. So it's all very interactive. So if along the way, if you please type your questions and we'll try to answer them on the run. So we'll see them popping up and you know, we'll answer them if they're relevant to the particular part that we're talking about at the time. Other times we might just hold it and come back to it at some stage. It's pretty unlikely we're going to have all the answers to all your questions, and if we can't answer a question, we'll save that, research it a bit further, and we'll probably email all the webinar attendees when we get to the answer. If you have any audio issues, please check your volume control and your audio settings. We've had a few issues a little bit in the past, so just check that out. Now, as this is our first hosted webinar, we hope that you be a bit patient if we stumble a bit along the way. And one of the things, you know, with particularly hosting it is we will need to be reading your questions, assessing it, try to understand what the question means, and then we'll see how we come through. And what I'll do is just pass the answer on, so the question on to either Tom or Jenni, or, you know, on the rare occasion, I might even be able to answer it myself. Now, the other thing that you need to know, just housekeeping wise, our information, this is our disclaimer actually, our information is general only based on what we know so far. Each business is unique, and the application of these measures could affect similar businesses quite differently, depending on your structure, your circumstances, or anything like that. So we'll try to keep our answers general if we can. Any particularly unique business questions, we'll probably try and turn it into a generalised answer. Otherwise we'll just probably, the best thing is to contact your amazing and friendly accountant at Lincoln's over the next couple of days, and maybe not over the next 4 days, next week, and we will try and answer that directly with you over the phone or by Zoom, which is something we're doing a lot these days. Righto, let's get into it. Just trying to work this. What we're going to, this is just a bit of a summary of what we're going to be talking about today. The whole of the stimulus is broken up into a number of different headings. So basically, it's the ATO measures, the federal government and Centrelink measures, the WA state government measures, which have been forgotten a fair bit in the whole mix, banking measures, employment considerations, and lease concessions. There's also the last thing, if we get time, is opportunities. So basically, the main thing is that we don't want to let a crisis go to waste. So we want to make the most of that if we possibly can, which seems a little bit morbid, but that's probably one of the things out of all of this that we really need to look into and make sure that, you know, we come out of this quite well. There's been plenty written about the stimulus and the measures, some of which has been a lot of speculation. We've we've held back a bit on bringing this presentation to you, waiting for that legislation, in particular on JobKeeper, which I think is going to get a lot of airplay. And that legislation only came through last night. Now, unfortunately, the practical application of that legislation is not yet available. We hoped that it would be by this afternoon, and it's not. So the legislation is out there, not the practical aspect of it. What they've done is handed this to the ATO and said, you go and make it work. And so we don't have all the answers at this stage, but I think we've got a pretty good idea, and we hope to be able to get that through to you today. So at the end of all of this, what do we really want today? What are you entitled to? When will you get it? When do you apply? For how long is it available? And what else do I have to think about? And so that's basically what it's going to be about. Now, the way I'll start this is, I think we will jump to Jenni. Maybe Jenni, you want to talk about the HR side of it first. I think you'll explain it, but the federal and the state components of the employment considerations, if you would do that, that'd be really good.
Yep, sure. So I think most of the audience here today is in Western Australia, and so I just want to remind you that we do have 2 jurisdictions in WA when it comes to employment. Most of the changes that I'm going to talk about that have happened recently in terms of employment are around the national system. So just bear that in mind. If you're a state system employer, some of what I say may not be relevant for you. Brenda, did you want me to go and talk about the Fair Work Act changes straight into
yes,
now?
please. Yep, go for it.
Okay, so in addition to the legislation that Brenda mentioned before around the stimulus, the government also yesterday temporarily changed the Fair Work Act. So this is for our national system employers. And the changes are quite significant. They will apply for you as an employer if you are a JobKeeper eligible employer acting in relation to a JobKeeper eligible employee. So the changes will override any award that is covering your employees. They'll also override an enterprise agreement if you operate under an enterprise agreement or an employment contract that you have with your employee. So they're temporary changes. They'll be in place, I believe, for 6 months. And they're quite significant for employers. It basically will enable employers to stand down an employee without pay and also change employment arrangements. So those include what they do, where they work, and also when they work. Now, some of the changes that the Fair Work have put in place give an employer power to direct an employee, and that's in the case of standing down, whether it be either completely or partially for a lesser period than what they would ordinarily work. Employers can also direct employees to perform different duties to normal, so they can actually go across classifications in the award under this arrangement. And you can also direct an employee to work in a different location. So some quite significant changes to what an employer is able to do in terms of directing. There's a couple of other things that enables employers to do, but only by request and by agreement with the employee. And that is changing the days or times of work compared to what the employee ordinarily does at the moment. Taking paid annual leave, so you can request your employee to do that if they agree. Important point to note there is that must leave the employee with a balance of no fewer than 2 weeks. And you can also request your employee take double leave on half pay. Now, in those situations where there's a request and agreement situation, the employee can't unreasonably refuse. So it comes down to consulting with them. And in fact, consultation obligations are an important part of this as well. So before giving a JobKeeper direction to your employee, you need to, before you give that direction, consult with them or their employee representative about that direction. You need to keep a written record of that consultation. And importantly, you need to give written notice of the intention to give that direction. And that has to happen at least 3 days prior to the direction taking effect, or earlier if the employee or employees agree. So some fairly powerful things that employers are now able to do if they are job keeper eligible. So that's important to be aware of. In addition to that, the Fair Work Commission also yesterday agreed to vary 99 of the modern awards. And they've now included in those awards a schedule called Additional Measures During the COVID-19 Pandemic. These changes mirror changes that have already been made recently to 3 awards, the Clerks, the Hospitality and the Restaurants Award. And these are separate powers to what the Fair Work Act powers that I just described. So these are, the variations are an entitlement to your employees to take unpaid pandemic leave, and also flexibility to take their leave at half pay. So the pandemic leave, sorry, I've just got a few notes here because I need all very new information. That enables your employees to take up to 2 weeks of unpaid leave if they're required to self-isolate because of a government direction or a medical authority direction. So previously to this, they wouldn't have been technically eligible to take personal leave in this situation because they aren't ill or injured. So there wasn't a possibility for them to take personal leave in those cases. Now they'll have access to take pandemic leave, which is unpaid, and up to 2 weeks of that. And then, of course, as I mentioned, the awards have also been varied. They allow employees to take double leave at half pay. So, for example, if someone wanted to take 8 weeks leave, they could have that at 4 weeks pay. So you spread it out in that period. So some quite decent changes to awards and to the Fair Work Act that took place overnight.
Jenny, I see there's a question up here. I'm not sure if you're seeing it. Hi Jenny, are there similar provisions to the amendments to the Fair Work Act coming from WA government regarding employees in the state system?
Not as far as I'm aware. They've got very different provisions in terms of standing down. So that's quite significantly different. And I've not seen any awards so far being changed in the WA system.
There's just another question just come through from Sally, which was, what is the implication to WA awards? You pretty much just answered that one as well, I think, hopefully, Sally, for you. There are another couple of questions that are coming up there from people about JobKeeper. I think I think JobKeeper will be a very popular topic today, and we might just hold those questions back until then. So Paul and Gemma, I'll just hang on to those questions for the time being about JobKeeper, and either Tom or Jenny will get back to those. Jen, so I think that's pretty much it for the employment part of it, your part of it for the time being.
Yep.
What if we just jump to Tom to give us, so Tom is our tax, technical and just about everything else in relation to COVID specialist, and so he's got a lot of content and a lot to talk about, and so we'll go to you and then Tom, I'll send a few questions to you from time to time.
Actually, Brendan, can I just jump in there? I just saw a question there from Diana. That pandemic leave is unpaid.
Got it. Yep. Hope that answers your question, Diana. Thomas.
Well, there's just another bit there for you, Jen. I think Cheryl's got a question. Is there a sunset clause on this new legislation?
As far as I'm aware, with the Fair Work Act changes that I just spoke through, it's 6 months.
Yeah, that's what I believed as well. All right, so Brendan's alluded to JobKeeper. It's probably the most popular one we're going to be looking at today. So I'm going to do a quick run through before we get too much into it with questions as to how it's actually going to work from what we know right now. So as Brendan said, JobKeeper was announced about a week ago at a press conference, and the extent of the information that we had was the Prime Minister and the Treasurer's press conference and 3 fact sheets on the Treasury website. All very vague, all not giving much guidance or info. Overnight, Parliament sat for a special sitting to pass through the JobKeeper legislation. It went through as it was intended and has now received royal assent, so it is now actually law. But the legislation was done quite differently compared to normal. Normally, it's the full legislation comes out and it's got everything in there. It's the full book of rules. This is how everything's going to work. This one was quite different because what it was pretty much was a bill that allowed the Treasurer to control this how he wanted to. He could change the definitions or adjust it as it needed to, so we didn't have to keep restarting Parliament just to make adjustments and changes to it. Which is why we don't have all the info yet, because what will happen now is the Treasurer is going to be providing the Commissioner of Taxation the instructions in the rulebook as to how to actually do this, and then the Commissioner of Taxation will issue his interpretations. So I have seen an exposure draft of what the Treasurer will be giving to the Commissioner of Taxation. It was up online overnight for a little window of time and has been pulled since then. So what we're talking about today is coming from all the fact sheets, all the reading of the exposure draft, and also from the actual legislation that was introduced to Parliament itself. So the JobKeeper payment is designed to keep employees engaged with their employers throughout this pandemic crisis. It's to keep people who would have otherwise potentially been stood down or had a severe cut in income or hours paid, and a similar amount to what it would be if they were on a job seeker benefit, which is the Centrelink version. So there's a couple of different things we need to look at. We need to look at who is an eligible employee, who is an eligible employer, and then what we know so far around the testing and then the claiming of it. So an eligible employee is going to be anybody who was employed with you at the 1st of March this year. So be someone that is full-time, part-time, or casual, but long-term casual. So that's someone who's been with you for longer than 12 months, as at the 1st of March. So unfortunately, if you'd had a casual that's been with you for 10 months, they will not be an eligible employee under this JobKeeper program, but hopefully they may be with another employer otherwise. So you've also got some eligible employees being a couple of the different visa holders. So any citizens from New Zealand or anyone on a 4-4 visa will also be covered. But we'll get more clarification on exactly who those visa holders will be hopefully next week. So that's your employees of your business who are eligible, but the other part of it is for sole traders who have experienced a downturn, or business owners, or what they're calling business participants. So for a sole trader, if you experience a downturn, which we'll go through the testing, you can access the JobKeeper payments. If you are trading in a partnership structure, a trust structure, or a company structure, potentially you may not be an employee of that entity, so we would then have to look at the alternatives, which is the eligible business participants. So for a partnership, so say we have a husband and wife partnership, one of those people can nominate to be the eligible person to receive job seeker payment, provided you meet the turnover criteria, but only one person. So a 2-person partnership, you can only receive one lot of the payment. If you are a trust and not an employee of the trust, you can nominate one adult beneficiary to receive the payment. And for a company, if you're not an employee of the company, you can nominate one director or shareholder of the company. It doesn't give us the openness to actually pick additional people right now. But the benefit with this legislation is that potentially if there's enough pushback from industry and pushback from the community, the Treasurer's got the ability to very quickly change criteria and change rules without having to fly everyone back to Canberra, sit down for another 12 or 15 hours to try and just add that little bit in there. So as it stands right now, that's who we know is a eligible JobKeeper employee.
Tom, can I just jump in there and ask you a question?
Yeah.
You spoke about a company where the proprietors do not receive a wage. What if one of a director receives a wage and another doesn't? Can the one that receives a wage is obviously entitled as an employee? What about the other? Because you're allowed to choose one that hasn't received it.
Under corporations law, you actually can wear two hats. You can wear a hat as an employee, and you're covered by workers' compensation rules, and you're covered by employee relations rules. And then you can actually also be under the hat of being a director or a shareholder of the business. So you can have two different hats on. So if you do have the structure where you've got one person who is actually a shareholder director, but is also a salaried employee of that business, as at 1 March, they will be eligible as an employee. And then you could also nominate a second shareholder or director who's not on salary to be a participant as well.
So is that potentially the same with a trust then? Say a trust has mum and dad and 3 kids, and 3 kids are on wages and mum and dad are not. Can the 3 kids get the JobKeeper plus one of the other 2?
Yeah, so as long as you are on wages, you are an employee of that entity as of 1 March. What exactly an employee means right now is whether or not, we don't know if you have been receiving income in this financial year or in the past financial year, or if it's just you're on the books because you've previously received income and never been terminated from the business. Hopefully Tuesday we'll have more clarification around exactly who's an employee of within a related group.
Okay, thank you. Now, Tom, I don't know if you can see, but there's quite a lot of questions coming through to us here about eligibility or eligible employees. And there's, here's an example. I think you got a quick answer to this one. Do part-time employees have to have been employed for 12 months?
No, so if they're a permanent part-time position, so the difference between your positions here is your full-time, part-time people are permanent positions, whereas your casual is a casual position. So provided that they're a permanent part-timer, they could be with you for a fortnight or they could be with you for 14 years and they would still be eligible under the arrangement.
Okay. There's a question here from John. It could be a tough one. Eligible employee is someone who's been on 12 months overseas leave without pay, I think, who's now returned and returned to work in October 1st as part-time, then full-time from Feb. Will they qualify?
Yeah, well, if they're a part-time or full-time employee, as long as they were on your books at that 1 March date, which is the important date as an employee, then they will be eligible.
Yep. Okay. Can I just throw another couple at you?
Keep throwing them.
If you own 2 businesses, I assume you can only receive one JobKeeper for one of those businesses.
So if you own 2 businesses within the same entity, yes, you can only receive one JobKeeper payment per employee. If you had them in different entities, then you're looking at 2 different registrations and 2 different applications.
Okay, well, just expanding on that, what if you've got 2 trusts, say you're a sole trustee, 2 trusts running 2 separate businesses, and you were saying earlier that trustee or beneficiary is entitled to JobKeeper, can they get it for themselves for each of those 2 trusts?
No, so you can only nominate one person can only be nominated once for JobKeeper. So if you've got a part-timer who works for you, but they also work in another business, that employee will only be eligible to be nominated for one employer. So it's usually going to be the employer who the employee is claiming their tax-free threshold for, because that's the predominant employer. But where they're doing it for both employers, the discussion has to be had with the employee whether or not you'll claim it for them and pay it to them, or their other employer will for you. So there is a question here I can see from Elizabeth. So, and it's probably the next bit I was going to touch on anyway. So the question is, I've just transferred my sole trading business under a company structure. Have I lost the opportunity now? No, because luckily we've got some other conditions in there that allow for where you have either started a new entity, a new business within the last 12 months, or have purchased a business in the last 12 months. If you have purchased a business and the employees have come along with it as well, so say they were employed for 6 months with the previous owner and now you've had them for 6 months with yourself, you can actually still say that that person has been employed by that business for 12 months as a casual, and you would be able to claim the jobs seeker payment for them. So I hope that answers for you there, Elizabeth.
Okay. Tom, did you see the question from Kate there? Can I receive JobKeeper as the business owner plus receive it for my employees? We are a cafe that's closed, so no income, no work.
Certainly. So what you're going to do is you're going to look at all your employees and work out who is eligible first. Then you're also going to look at what business owners are able to be eligible as well. So if you're trading as a partnership, you can nominate yourself as one of the eligible people to receive it, and then you can nominate all of your staff who qualify under the bits we've talked about before.
Yeah, okay. We might just grab one more question and then you can just go on a little bit. From Ben, it was clarifying eligible employee. Can a casual who's been employed for over 12 months, who's not been paid during the last 12 months, I think that's what it means, can that person be entitled?
We'll have to follow that one through, Ben, and see, because when the tax office and when the legislation talk about employees on books, they don't go and then clarify exactly what that means, whether it's they're actively receiving remuneration right now or they haven't been terminated out of your business. We do know the tax office will be using the single touch payroll info as a way to track a lot of this stuff, but they're also going to have additional reporting for those that aren't reporting single touch payroll or are sole traders. So it's probably one that we're going to just have to wait and see exactly what the detail is going to tell us.
Okay. There's a few more coming through, but I might just, if you want to continue on, Tom, with your thread, and I'll throw another couple at you in a little while.
Yep. So we will come back to the rest of these ones on employee bits and pieces, but hopefully maybe we might touch it as we're going through the next bit. So once you've looked at your employees to work out who are eligible employees, the process is going to be to nominate on with the tax office. This process will get known next week. And then you have to describe and tell them how you've actually passed the test. So the main test that they're going to apply to whether or not your business has experienced a downturn is what they're calling the decline in turnover test. So for a business that has a turnover less than $1 billion, and I'm just going to assume that everyone's in this category today, your turnover will have needed to reduce by 30% compared to the relative period last year. So unfortunately, we don't know exactly what the testing period is yet. We do know it's going to be linked to the activity statement regime. And from the commentary and from what we've seen so far, if you're a monthly BAS reporter, we're going to be looking at your monthly BAS and comparing it to that BAS 12 months ago to see whether or not there's been a decline of 30% or more. Where there is a decline of 30% or more, the business will become eligible to actually access the JobKeeper scheme. But it also talks about a projected turnover as well. So where you haven't already experienced the downturn or are just starting to at the end of this quarter, but your projected is going to just continue on a downward track, there is, from reading of the rules that are sitting right now, the potential to actually access this because of a projected downturn. You don't have to wait until you've actually gone to the full 30%. The Commissioner is going to have discretion to actually be able to apply alternative tests as well. So potentially you may not have had an activity statement in the previous 12 months because you could be a new entity. The Commissioner will have other ways and methods that you can prove up the downturn for it. So once you've found out who your employees are that are eligible for it, you have to have notified them that you're going to be registering. Once you've worked out also then that you've had the experience, the downturn, and you can actually receive these payments, you register with the taxation office, which we'll know how that's going to look very shortly. And then the only other criteria is that to be eligible for the payments. Now, the payments are going to be coming in monthly in arrears. So the grey area right now is, do you have to be paying your employees the $1,500 a fortnight right now, or can it be done just prior to? Can it be done once you've actually started receiving the money from the government? So it's a little grey on that right now, but what we do know is you will not be able to claim the money until you've actually paid an employee the $1,500 a fortnight. So whether that is 2 days beforehand or within the fortnights, we're just not sure yet. But we do know that they're going to be using, the government will be using the STP system to track that payroll info as a starting point. So your employees will then, all of those eligible employees will be entitled and will have to receive at a minimum $1,500 a fortnight of gross pay. If that is above what they would normally have been receiving, so if you had an employee that was normally receiving, say, $1,000 a fortnight, you will have to pay them the $1,500 minimum, and then you get that reimbursed in the following month. Now, your employees who are already being paid above the $1,500 amount per fortnight, you just continue to pay them as you have been, but the $1,500 is there to reimburse some of their wage cost. So we'll just do a little bit on the super and the guarantee side of it, and then we might come back to some questions because I think they're starting to pile up again.
There are. There's lots of questions there. So yeah, finish that off and we'll come back to it. Thanks.
So with our two employees, so we have an employee who earns $1,000 a fortnight, but we now have to pay them $1,500 a fortnight. The superannuation requirements for that are, you actually do not, sorry, we've got 3 employees. We've got an employee who's not doing anything because we've actually had to close our business currently. We can't trade and we've shut our business down. We can pay that employee the $1,500 a month. If we can use them effectively in any way in our business, you obviously can. Otherwise, if you actually are physically shut and you are forced to close and you have no productive work for that person, they will still be paid their $1,500 a fortnight. If that is the situation you've got where you are actually stood down, you do not have to pay them superannuation guarantee on that $1,500. Your second type of employee is someone who is currently still working in your business, so your business isn't fully shut down. You've just had a decline in income and they're getting paid under the $1,500. So say they get $1,000 a fortnight. You have to top them up to the $1,500. You have to pay superannuation on the amount that you would normally have paid them. So you pay the superannuation on the $1,000 and you don't have to pay it on the top up $500. For your employees that you're paying above the $1,500 already, you just keep paying superannuation guarantee as normal. All right, so let's go to some questions. So I did see one about hiring new employees. So they would have had to have been on your records at the 1st of March. So any new employees won't be eligible for the JobKeeper program with you. But if they're still with a previous employer, they may still be able to claim it with them.
This one here, Tom. If we have eligible employees who have been laid off and would normally be paid weekly, for the week ending, say, Sunday, the 5th of April, would normally be paid now. Is it safe to pay them their $750 a week before the official ATO application has been finalised?
So if you can comfortably, in your own mind, think that you have definitely had the downturn of 30% and you can meet the criteria, you could pay them the $750 a week for this fortnight that's ending shortly. We're just not 100% on whether or not you need to be doing it from the start of March, or if, as long as you've, prior to claiming the first lot of payments, you've actually paid each employee the $1,500. That was one of the details that wasn't clear in the legislation and the draft ruling so far. So not a great help, sorry, but it may be a cash flow question as well, potentially.
So Tom, I'll put a practical one out there for you. What if you've got a business that they had 10 casuals? The casuals are working roughly 10 hours a week at $25 an hour. How is that business owner going to be able to then pay? So therefore, the 10 employees, casual employees, will all be eligible for $1,500 per fortnight. How is that person going to be able to fund 10 lots of $1,500 per fortnight, and they still got to wait a month to be eligible for the rebate?
Yeah, so we're seeing that a bit with clients because there is a delay, and obviously when the money's coming through, because it's also got some back checking in the background. So if all your employees are eligible and they're all going to be on the program, you've registered for them, but you're not turning over any income, you're still going to have to pay them the $1,500 a fortnight before you're going to be able to be paid. The banks have been given a very large amount of funding to support small businesses currently for cash flow and liquidity funding, and that the funding that they've received is actually guaranteed by the government up to $250,000 for that business. Which means that nothing has to be secured of your own assets. So if you didn't have security, you can actually still get loan funding. The loan terms have been very, very attractive. The banks are looking at a 3-year loan for most of them, and the interest rates are 4.5% to 5.5% depending on the bank, with no repayments due for 6 months. So it might be a question of have a chat to your bank manager or to your local branch, or even just have a chat to us. Every bank's doing something a little bit different, but they're also doing something quite similar each. Their websites have got everything on there as to what they're doing. So that may be the solution, unfortunately, to fund those wages until you start receiving the payments.
Okay. We're getting a few questions about the comparison of the calculation of the 30% comparison periods, so this year to last year. Would you consider the same period last year as a reasonable comparison for super payments? Oh, this is a superannuation question. For super payments for casuals who have varying income from week to week. So how do we calculate the superannuation basically in this case?
There's no clear-cut rule on that right now. It just talks about, and again, we're talking from 5 different examples that the Treasury put in their work papers and their fact sheets. There's no clear-cut rules right now. From the examples, it talks about if you're paying an employee under the job seeker amount, so if you were paying them on average $700 a fortnight, you would pay your super on what you would averagely paying them on an average, and then you wouldn't have to pay SGC on the top-up component. But we're hoping that as soon as legislation is done and released, that we will actually know exactly the nuts and bolts of how it's all going to work.
Okay. Here's a beauty from Christy. How much tax should we take out of the $1,500 payment? My casual employee is eligible, but we've closed down until further notice. Do we pay them the full $1,200 or take a percentage out?
So we still do the normal withholding. So you still have a withholding obligation, just as you have a superannuation obligation potentially, that you need to look at the withholding tables and take out the appropriate amount of tax. I suspect it's going to be around the $200 mark, which means that the employee is going to get $1,300, $1,400 potentially in their hand. But use the appropriate withholding tables because they might not be taking the tax-free threshold, or they could have a HEX debt or something as well.
And here's another one for you. In the business owner situation, not the employee, but the business owner being eligible for JobKeeper, do they have to pay themselves the $1,500 per fortnight until they actually receive the payments from the government?
That's a great question, and we're not sure. That's the short answer. I would think that you wouldn't have to technically pay yourself money from your business because you're going to be covering your own costs from the business probably anyway. As with a sole trader, can't pay themselves a wage as an employee, being the only person in the business. But that will be a wait and see when the rules come out, probably early next week, which is unfortunately some of the answers for a lot of this.
Okay, this is, and one more just for the moment, and then we might move on a bit, from Morris. For an eligible employee, a long-term casual, who's been stood down and has now gained alternative employment, do we still have to pay them the JobKeeper payments?
So you don't have to pay any employees a JobKeeper payment. You actually, it's not a mandatory, your employee is eligible, they must get it. You do have the option of not registering for the scheme at all. There is some, if you've got employees who are with unions, there's some union stuff around that that's been put into some of the employment law about you would actually have to go to arbitration or to a mediation about the process. But if you're a regular employee, you don't actually have to take it on for all your employees. It is an employee by employee basis and employer by employer basis. If they have got alternative employment though, so in your question, Morris, you can actually still pay them the job seeker payment as long as they were on your records and they continue to be employed by you for the entire amount that the time you're paying them. You could be using and nominating them and claiming them in your business for the JobKeeper payments. Or their alternative employer could as well if they were eligible.
Okay, do you want to pause there for a second, Tom? Give you a bit of a rest. Jenni, have you got anything else to add following all of that JobKeeper conversation? Is there anything that from the HR side that you need to add at this point? Sorry, I've thrown you under a bus,
yeah,
but
yeah. No.
Okay, no worries. So, Tom, we might just, we've still got a few sections to cover. I knew the job seeker was going to get lots of airplay, and we've answered 21 questions and we've still got 13 unanswered, but I need you to sort of pause a bit and go on to some of the other measures. Some under the heading of ATO measures, we've got deferred tax payments and the instant write-off of assets. Did you want to talk at all to any of those?
Yeah, we'll do. I'll answer one more question because I've seen it and it is probably a useful one. Where you're hiring employees on a casual basis but via a labour hire agency or a temping agency, something along those lines. Those employees won't actually be, if it's on a labour hire arrangement, they won't be employees of yourself. And the labour hire company wouldn't actually be eligible to be claiming for them either, from what I've read. But they would have to assess that themselves. If you had just sourced them from a recruiter or an agency where you've actually directly hired that person, then they're an employee of you and you would potentially be able to get them on the JobKeeper program. So just to finish on the JobKeeper. So the JobKeeper program, $1,500 comes into the business and then $1,500 has to go out to the employee at a minimum. So fortunately, there's nothing in the business to help with cash flow, apart from potentially trying to get it to fund some of the owner's living costs. But it's about keeping people engaged with the employer so that if there's any productive work they can do, I mean, they could be working on database stuff, they could be making up new marketing material or menus or anything that's going to be useful coming out of this. That employer can be engaged to do those things. It's about keeping people engaged with their employer so that the second that we're able to lift some restrictions and sort of bounce back, we've got available employees to be able to just get straight back into it. But it's not a $1,500 into the business and you just pay your employee the $200 you pay them a fortnight. You've actually got to pay all of it onto the employee.
Yeah.
Brendan. Sorry.
Yeah. Yep.
I just want to add one thing in because I've been talking a fair bit of reference to stand downs, and I know that there's probably a lot of people on this webinar who have stood down employees, and given that we're just on the cusp of Easter with public holidays, probably a little known fact about stand downs is that if the employee is actually entitled to be paid for public holidays while they're on stand down with no pay.
Right, that's interesting and just a little bit scary. So saying again, so you've stood down somebody,
yes,
because your business closed, say 3 weeks ago.
Yep.
And on leave without pay, is that what it is?
Well,
and no pay.
their employment still keeps ticking along. All right. So, and an employee is entitled to be absent from work on a public holiday, of course.
Yes.
They would normally be paid for the ordinary hours they would normally worked. So during a period of unpaid stand down, public holidays qualify as authorised absence from employment and are deemed not to be unpaid stand down at that point. So they're still actually entitled to be paid for that public holiday.
Right, I can see a lot of people's heads spinning at the moment on that, and sending your wages package into meltdown, trying to get that to work on a wage system for single touch payroll, for example. Okay, anyone who's in that situation probably would need to. I'd be suggesting give Jenny a call to talk that through a little bit further. Okay, Thomas, back to you. So just to cover off on some of those other things, we're probably aiming for an hour. We've been talking for 45 minutes and having lots of fun. And so I wouldn't mind covering a few of those other things that I mentioned before: deferred tax payments, write-off of assets.
Yep. All right. So, and yeah, we can still see, I mean, there's still 19 questions, and probably 95% of them are on JobKeeper stuff. Do feel that you can just contact us early next week, and we'll try and give you some answers on these questions. Unfortunately, a lot of it right now is we're just unsure as well, because we're working from a 5-minute speech, some fact sheets, and a 100-page bit of legislation that's quite a hard read. But the ATO's got some solid stuff that has come out. So the ATO have come to the game and said, we want to help small businesses. So what they've introduced is that any small businesses who are having a downturn or having issues, impacts from the coronavirus, they can elect or contact the tax office about deferring payment of activity statements, pay-as-you-go instalments, income tax assessments, FBT assessments for up to 4 months. You just have to contact the tax office, explain how you were affected. They're not questioning about it. They're not really, high inquisitor on it. They just want to help where they can. Businesses who are reporting on a quarterly GST cycle can actually also opt to shift to a monthly GST cycle in order to obtain GST refunds faster. Now, if you've got pay-as-you-go instalments, so if you're on the pay-as-you-go instalments regime, so you're paying your tax either quarterly or on the primary deduction method where it's 2 quarters for the year, you can, for this March quarter, vary that instalment down to a lower amount or to nil, and also potentially claim back some amounts you've paid in previous quarters as well. Do just be aware that even though you've paid the tax instalment in the past, if you claim it back, it doesn't count towards your tax return, so there is a potential tax liability into the future. But that can be managed with payment plans and deferrals and such if cash flow is actually what's needed right now. The other thing the ATO are doing is any interest and penalties are actually being remitted from the 23rd of January onwards. So the tax office are actually holding back applying penalties and interest to late accounts or lodgements or anything. They're also doing very low cost, low interest payment arrangements as well, if you want to maintain a payment arrangement with the tax office. For a bit of a shift in pace. So the first round of stimulus measures the government announced was more about spending money and for businesses to sort of ramp the economy up. So they took the $30,000 instant write-off threshold that we had, which was any assets under $30,000 could be written off against tax immediately, and they bumped it up to $150,000. So if you'd bought a new coffee machine and it cost you $5,000, it was an instant tax deduction for you when we lodged the tax returns. That's jumped up till June this year to $150,000. It does have to be paid for and fully installed before the end of June. The other thing they've done is actually shifted they've also allowed any assets that are larger than 150,000 to have a accelerated depreciation. So if you'd bought an asset worth $200,000 from the 12th of March onwards, that asset would get a 50% tax deduction straight away. So you get a $100,000 tax deduction, and then it would go into your normal depreciation regime. So that can be quite a tax benefit currently. But that was all from the first round. The first round was about encouraging spending. The second round of stimulus, which is the JobKeeper and the other amounts, is a lot more about keeping people with cash flow. And we probably need to touch on the state government stuff as well. So the WA state government has announced a whole heap of measures as well to support small businesses. So if you're a payroll tax paying entity, they've actually waived the payroll tax for March through to June this year. So if you've been lodging payroll tax returns monthly or on a quarterly basis, then for the following few months, you actually just lodge as normal, but you put in all your wages as being exempt wages, and you have no payroll tax assessment. For annual payers, that'll be done as part of your annual reconciliation, and you will get additional time to pay that annual return as well. If you have been a payroll taxpayer in the past, so in the last financial year you were a payroll tax paying entity, you will also receive in July a $17,500 cash grant from the WA government, which they're going to send as a cheque in the very modern age that we're in. And they have also waived for the next 12 months a lot of the statutory fees. So building licenses, plumbing licenses, electrical licenses, tourism operators if you're paying government licenses or fees, liquor licenses have all been waived for the 2020 year. And any that have already been paid are actually also eligible for refunds of the amounts. Finally, if you are leasing or renting a building from the WA state government, they're actually not charging rent for the next 6 months as well. So as a last little one I've got before we probably go back to a couple more questions with the timing. So Synergy has also come out. So the power provider in WA, Synergy's actually come out with assistance from the WA government and announced a small business and charity electrical tariff credit. So if you're a C1, D1, K1, L1 and R1, which I think are the business plans or the business tariffs, Synergy are going to credit your account with them for $2,500 on the 1st of May, and that can go towards power bills for the next few months. So just check your last invoice and see what tariff you're paying. You can jump on the Synergy website to see what those ones are again. Any small business will be eligible for it, and the credit will be done automatically. So you don't have to apply for anything. You don't have to do anything. It'll just appear on your next Synergy account, and then you don't have to pay your power bill for a little bit. So Brendan, that's probably a very quick rundown. I mean, the document we've got, which is sort of our running sheet of what's been happening and what's out there for businesses, is 31 pages long, and we've tried to blast through it very quickly today. Brendan, is there any questions that stand out you think we should try and attend to now?
Probably not, except this one is interesting. Will this video be available to watch afterwards, just for staff that couldn't make the webinar? Jenny, you can answer that one. That's easy, I think.
Yeah, it will, and we'll distribute that probably early next week.
Yep, sure.
Sorry, we also received a few questions from people prior to today. We haven't forgotten about you, and we may not have answered some of your questions in this session, but we'll come back to you on those. Any questions we haven't been able to answer.
Yep, sure. Thank you, Jen. Tom, you have had a 20-second break, so back to you. There's a few things that you haven't touched on really that much, and probably not quite relevant to this situation, but the early access to superannuation, the apprentice subsidy, the cash boost for employers. I think you spoke briefly about that, but do you want to expand on that at all?
We might finish on the cash boost for employers, because this one's going to be relevant right now. So if you are a quarterly BAS lodger. You're going to be lodging your BAS this quarter, and that's due at the end of this month. What's going to happen is you're going to lodge your BAS, and the government are going to look, or the ATO are going to look at your pay-as-you-go withholding for that quarter, and they're going to pay you a credit of 100% of that withholding, or $10,000, whichever one is the larger of the two amounts. Now that's going to be paid towards your integrated client account, which is your BAS account with the tax office. If that extinguishes your BAS liability for that quarter, they'll refund the balance out to you, or it will reduce your liability with the tax office. Now, if you are this quarterly reporter, come the June quarter, they're going to give you the same arrangement again. So they're going to look at your wages withholding tax and either pay you 100% of that if it is over $10,000. Otherwise, you won't get anything for that quarter because you've received the minimum amount on the first round. But then the second round kicks in, and as of, again, the June BAS, you'll get 50% of what you received in the first quarter, which will be $5,000, and then in the September quarter, again. It's quite messy to actually look at and calculate and talk through. So on our website, we've got, under our resources tab, some workings for this and some examples so that you can actually have a look at it. But if you're a monthly payer, what's going to happen is we're going to look at your March BAS and your March month reporting, and you're actually going to get 300% of that reporting because you've only got 1 month of wages in there. It works out in the long run to the same as a quarterly payer. It's just that you'll get a larger credit in this month, and then you'll get lesser credits in the following months. But jump on our website, have a look at our resources tab for some work examples on that. That money will not be issued any earlier than the 28th of March. So even if you lodge your BAS or you've already lodged it, that money is going to not be credited to your account until after the 28th. And it will go towards your BAS liability first, and then it will be any refund amount will then come out afterwards on that one.
Okay, brilliant. I've just been given the 5-minute warning. So I wanted to maybe finish off on a couple of other little things. I'd see if I can share this screen for you. So I've had a couple of questions that said, can we get your document that was so we can read all the key issues? That's actually a yes, I think, Tom. We've sent a copy of that out to a lot of our clients as we've been talking to them along the way. But is that the case, that you're happy to share that all-inclusive stimulus and measures package with our clients?
There's a lot of info in here. We'd much rather have a chat if we can, to go through your individual circumstances and how exactly things can fit. A lot of this is on our resources tab, and early next week we'll probably be updating the documents on there with the changes that have occurred, because this is an ever-changing thing right now, unfortunately. It takes, it's about 2 hours of update every couple of days just to keep on top of the new announcements. But either give us a call, we can talk through it, or jump on our resources page. We'll probably get it out, or we'll get some of it out with this webinar when we send it out, Jen, as well.
Yep.
Okay, so you can see I've shared the screen, just the basics of what we've just spoken through today. I meant to share it earlier, but that was a fail. But I just want to finish off for 2 minutes on point 7 there, which is opportunities, and the flippant comment, which is not letting a crisis go to waste. And we've seen some extraordinary examples of innovation and changes to business practices and those type of things. And I really think that this is an opportunity. Okay, many of us are really struggling with cash flow, with the emotional effect of the downturn of their business, with the effect of needing to stand out employees and that type of thing. But it would be really useful also to have a bit of a think about the way that you operate your business. And for example, the distribution method that we have, that people are using to operate their business, the way they deliver their products to your door now, the way we're servicing, for example, Lincoln's, the way we're servicing our clients by video, what are we selling? The type of products that we're even selling now, and the lines of services that we are out there. Another example is expense management. There's been so many conversations and looking in at cutting your costs. Yeah, some of those unnecessary costs that built in over time over the last while. So, and then the other example, the last probably, is just time to get some of those projects done that you have been putting off for quite a while, and Tom touched on that a little bit earlier. So while it's still in the early days, we don't know how long we locked down for, but a lot of our thinking is also coming out of COVID. So what we have to do and what happens when we come out and how we come out. So if you can have a bit of a think about that in relation to your own business. We probably should be finishing off. I'm just interested in some feedback. We'd love to have some feedback from our clients, from all of you guys who have been listening in for this last hour. In particular, is this an okay way for us to deliver this type of content? We would be, it hasn't been a complete fail. I think it's worked fairly well. We're happy to do this regularly. We're happy to do this with any type of topic that you are interested in. So if we could have some feedback by email or otherwise, or even in the chat questions, if that's the way you want to go about doing it, that'd be really good. Also know that Lincoln's is a team of 50 people. There's many people here capable of answering many of your questions, and we've got your back. We are here for the long term, and we passionate about our clients and assisting them during this period of time. It's a tough time, and we'd really like to be able to continue to do that. So please get on the phone. We've just been so busy, we have not had a chance to speak to everybody. So we'd like to be able to. So give us a call, and we will endeavour to answer your questions. So just to finish off, Jen, is there anything else you wanted to add?
No, not in the time we have, no.
No worries, Thomas.
We'll follow up with the recording and the questions.
Okay. Tom?
No, just keep tuned with anything we can get out. Give us a call if you've got any questions or want to talk through your own circumstances, and we'll try and get back to you as soon as we can. But yeah, it's still a ever-evolving thing for us as well.
Yep. Okay. Now, clearly we're going to be busy because the questions are still rolling through right now. We're up to 38 questions unanswered, so 40 and 27 that we have. So keep them coming, please. We'll and one way or another, we'll get to them. And feedback would be fantastic. Thank you all for your time. Have an amazing Easter. I'm guessing you're all not driving very far. Have a great Easter eggs. Try and chill out for a bit if you can, and all the best to you all. Thank you very much.